All right, so in this lesson here, I want to share with you resources that you can utilize when it comes to building your credit. So you have the secured loans, or sometimes they call it certificate of deposit or CD loans. These loans here, again, they work very well for also if you are cleaning your credit or getting your credit cleaned, and you want to add about three of these on there on your credit report at one time. That would be great because as the negative items are coming off, these positive accounts and positive payment history is coming on. And I've had clients receive anywhere between 30 to 40 point boost every single month as the negative stuff was coming off and the positive accounts were coming on. All right. Options to add age and history to your credit report. A lot of that can be done with reporting like your rent and certain like utility bills and things like that to your credit report. So these are some resources that you can use. Keep in mind that some of these only report to two credit report agencies, but on the website it'll tell you if they report to all three. Even if they only report to two, I mean they're still worth getting because even if you have two credit report agencies that are very strong, you can still get funding with those two, and work on the third one, or at least use the two strong ones to leverage to work on the third one that doesn't have as many accounts on it. But yeah, these are some resources here that you can also use to get age and history. And how this works is when you establish the account, you want to make sure that you're giving them the date that you moved in, like at least a couple of years back, and then they'll give you 2 years right away of a good payment history. So you'll have an aged account, primary account with payment history on it as well. All right, and then so these are some revolving accounts that have a lower barrier to entry. These are either for people who have no credit, have bad credit, or trying to get credit, or thin credit profiles. Um, some of them require no inquiry. Some of them are just like a soft pull to be approved. Some of them are initial soft pull, and then there's a hard pull after. If it does state on the website that it's initial pull first, and then a hard pull, what you can do is you can go ahead and get pre-qualified with the soft pull, and then complete the application. And then before you hit submit on the application, you can lock the credit report agency that company pulls, and then to avoid an inquiry. All right, so Experian also advises or promotes using authorized users to build your credit. And I'll get more into that later, but this is definitely a great option for people who are looking to build credit. Do not add authorized users onto a credit profile that is has negative items on it, late payments, any type of charge off, stuff like that. Just don't waste your time, don't waste your money or whatever it took for you to get that. It's best to clean off all the negative items first, all the negative derogatory stuff off first, then add the authorizer on. Otherwise, if you added on before, you're not going to get the full impact of that credit boost. All right. This is another way, some other techniques of how you can build up your credit as well. If you have existing credit cards, or you have credit cards, or you're getting unsecured credit cards, um, how to increase the limit on the cards is so every 90 days, what you want to do is as you're using the card and charging the card, every week you want to make payments on the card. Not small payments, not minimum payments, but you want to pay the card off, charge it up, pay it off, charge it up, pay it off. Even if you, let's say you charge $1,000 on the card one week, you pay $800, and you charge $200 the next week, and then you pay it off totally, and then you charge another 500 and pay off. If you keep doing that every week for a three bill cycle, or 90-day cycle, it's going to trigger the banks to automatically increase your limit. So the more you spend and pay on the card, spend, pay, spend, pay, spend, pay, the higher the limit that they will increase the card. Also, you can utilize auto loans. Some uh, auto loans that you can do is you can take over lease payments of other people that just can't have they can't keep their lease car anymore, to move the lease vehicle anymore. You can take over their payments, and then all that aged account and all that payment history will reflect onto your credit report. If you have auto loans or auto loans on your credit report that are open right now, you can refinance the auto loans with a different lending institution. And what will happen is it will pay off the old loan, which will look good on your credit report that you have a paid off loan, and then it'll reopen a new loan, which will increase the number of accounts, and then you just can you'll have a lower payment. Hopefully, you'll have a better interest rate if you have a better credit score. So pay attention to that as well if you decide to use that technique. And the point of using a different institution is because some institutions, when you refinance the vehicle, instead of them making those comments on your credit report that it was paid in full, and then a new loan is open, they'll have put in the comments that it was refinanced. So it kind of defeats the purpose of using one auto loan or using one vehicle to get multiple auto loans reporting or multiple paid off loans reported onto your credit report. And then you have unsecured loans. At some point in time, you want to get an unsecured loan onto your credit report, preferably something over $5,000. When you get the loan, if you're able to do something $20,000 to $30,000, that'd be even better. But when you get the loan, before that first payment is due, as soon as you get the loan, you want to pay off about 80% of the loan, so you don't have a huge chunk of debt hitting your credit report and also impacting your debt to income ratio. And then for the final 20% of the loan, then you'll stretch that out and you'll make payments on it. If it is an auto loan or a simple interest personal loan or something like that, what you can do is every single week you can just divide the payment into four payments, and you'll make the same amount every week, but you'll avoid paying the interest because you won't allow it to accrue. So if your payment is $400 a month, you'll make the 80% up front. By the time the loan reports and it's time to report the first payment, it's already there. And then from there on, if the monthly payment is $400 a month, you divide that by four, which is $100 a week, and you just pay that, and then you avoid the high interest when it comes like with those loans.